New record highs. The bull party continues and nothing seems like it can stop the party. But here's something that's interesting. Greed is now back. So now the greed's back and we're at fresh record highs. What is going to happen with the record number or the rise to the $6.15 trillion currently sitting in money market funds? I don't know about you, but if I was getting 5% a year or about 2.5% year to date, well, I would be a little bit upset with what's been happening with the S&P because it's up by nearly 20 and in the last year up by 28. So, people are actually raising even more money, right? Rises to a record. So, is this scared money or is it smart money? Right now the record is at new highs. We've now also hit the Fibonacci extension on the S&P. So, with all this money being raised, are these people who are scared or are these people who are smart? What that really comes down to for me is whether or not this money is going to come off the sidelines and start to get a little bit of FOMO because this would be difficult to watch. 5% is nice. It's beating inflation, but hey, 20% is like a lot better and the market just cannot seem to stop. And now investors are wondering what to do. And Jerome Powell just finished his second day of testimony today. So what are stocks doing? Well, I just told you, fresh record highs. We've now hit the Fibonacci extension on both the S&P and the NASDAQ. It's a summer melt up, and every single industry group is up. The NASDAQ, incredibly, also actually came back down and bounced off its Fibonacci extension. And most ETFs that I watch are up. SMH up 2.3%. The Magnificent 7, 1%. XLG, 1%. The Dow Jones pushing off what used to be resistance, bullish. The Russell over its 50 DMA. Oh my goodness. Equal weight S&P over the 50. Equal weight technology, new all-time highs. Whoa, we're noticing a theme here. Yeah, it's up. And the theme is pretty clear. Investors are starting to get a little bit of greedy. So with all this money on the sidelines, will this greed turn into FOMO? Drop me a comment and tell me what you think. But if you're wondering what to do, let's go through and look at the news now. Jerome Powell didn't really make news, so that's excellent, right? He was really good today. They were grilling him pretty hard, but this guy knows how to stay composed. And it looks like he was aging in front of us. He looked like he was getting a little bit old. But the good thing is that we closed at new record highs. So there's the news and the reaction to the news. The news, in my opinion, was bullish. No major headlines. And the reaction to the news, also bullish. So what we expect to happen is happening. What is that? It's bullish, in case you're not clear. And we still have a lot of cash on the sidelines. The king is back in the driver's seat, or Apple. They're now the most valuable company in the world as of today. And they aim to ship 10% more phones this year after a bumpy 2023. Remember that Apple sales account for roughly half of the company's revenue. So that would be like pretty good. Why? Hey, Apple's pretty big. There's still challenges. Not going to try to deny that, but hey, look at the heat map today. Boom, 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 right? We got chips up. This sector over here is looking really good. Everything's actually pretty broadly green. Looking at the last week, hey, it looks a lot better than normal, right? It's not perfect, but hey, it looks okay. In the last month, there's still work to do. So, like I said, what's going to happen from now and what does history say? Well, going back to 1928, the first 15 days have been incredible. And I did the math. Here's where we are right now. So, if we look at month to date, I'm just going to rattle off the numbers fairly fast so we can just push forward and talk about more stuff. So the S&P, we're looking at the number right here. So S&P up by 3.14%. Whoa, right? In how long? It's been 10 days. Whoa. NASDAQ, 5%, 4.98. And then chips, whoa, 7.89%. So chips lead tech and tech lead SPY. Okay, so if chips lead tech and tech lead SPY, what's going to happen after the 17th? Well, history says that if we get a dip right after we're more than 10% green year to date at the midpoint, 80%, 82% chance we're going to be higher. And it's like a lot higher, another 7 or 10%. Whoa. If we get more than 20 record closes into the first half of the year, see, it's just as good. 80% hit ratio and still pretty good. 5%, 9.6%. We're already at 3. So is this it? Are we going to keep going higher? So now what it really comes down to is what happens here on July 17th. Just before we look at that, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up, subscribing to the channel, that would be greatly, greatly appreciated. So what we've been talking about is that in the last 3 months, again, after the quarter's over, now we want to see that rotation start to happen. That's why I'm focusing on the weekly chart here. But now let me show you something different because with a lot of these charts really starting to coil up, and kudos to Andrew who pointed that out today, along with Kat in our group. These charts are not really doing anything. So if we look here to like the daily chart, man, nothing burger on IWM. Look at RSP, big old nothing burger, right? Market's continuing to blast off, and these things are doing nothing. So if the market's doing this, but a lot of groups are not participating, why could that be? I've mentioned it in a previous video, but I'll go through it right now. If rates don't go down, it means, so we don't need the market to, we don't need rates to go down for the rally to continue for the S&P. What we need rate cuts for is for the market to broaden out. So that is what I think is important. That's what Jerome Powell talked about today, the path for us to get to cuts. So the market is getting narrow, and we can see that by looking at something else like XLG, which just looks at the top 50 companies in the S&P, right? The top 50, the top 10%. So these stocks are doing the same thing as S&P, right? Mega big up. So it's not just the Magnificent Seven. It's just a theme of the biggest companies are working. People are scared. That's why they're raising even more money to put them into money market funds. But the biggest companies are still booming. So let's look here. What happens after the 18th? Well, Netflix reports. And as of right now, it's a whisper beat. We know that guidance matters. We know that being at all-time high matters, but Tesla's up next as of what I can find right now. And that would be a beat. So Tesla would report a beat on July 23rd. And I think Elon's going to be a little bit excited. Why? He's got the robotaxi and stuff. So I think he's going to pump himself up. Then we look over here to Meta, right? Cool sailing here for Mark Zuckerberg, right? Born in the USA or born in America. Here we go, right? That's a pretty nice beat. It's like 10%. So do we have to go lower after the 17th? Well, sell in May and go away. Did we go lower in May? No, we did not, right? Little dip, boop, right? Nike swoosh, right? Check mark, up. So no, we don't have to do anything. History is a guide, but we want to be receptive to what could be coming as catalysts. These will be the catalysts. This is big tech. And as of right now, we're seeing beats across the board. So Jerome Powell's like, hey guys, hold my beer. Time to go up. I'm giving you the thumbs up. Why? Hey, everything looks good. And this is incredible. So yesterday, after only one day, we basically hit both my targets. So I'm very happy with this because no one believed it coming to here. And a lot of people don't think there's upside to the market. Why? They're raising money. So where can we go? Well, we can definitely go higher. My original target was 6,200. So, hey, let's move the, like we're playing football, right? We're going to move the whatever you call it. We're going to move the yards, right? There we go. Let's move the goalpost. Why? Man, we're just starting to get back into greed, right? The party's not even started. And if we look here to data for tomorrow, we're looking for 3.1 on headline CPI. I think that's going to be bullish. So with that said, thank you for tuning in. Maybe you want to subscribe on the left or hang out with me at 9:15 a.m. tomorrow. Thanks so much.